Good morning, everyone. This is the fraud panel at the Microcap Conference. First of all, we'd like to thank Charlie and Steve and all the wonderful folks from DealFlow for such a great conference. And if you think this is a good conference, you should come to the Reg A conference in June at the Westchester Country Club. That's a fabulous conference, too. They do better conferences than anybody I've ever seen. And gentlemen, I'm going to let you introduce yourselves.
My name is Joe Darragh. I am a former SEC investigator on the Microcap Fraud Task Force, and left about a year or so ago to start a marketing agency and also do independent consulting work in the microcap space.
Great. Marc, LoPresti, 27 years on Wall Street, ex-Lehman, 20 years as a securities attorney. Retired from that a couple years ago, run a small family office that does tech investing, both public and private. And a few other things, but the most relevant for this panel is probably my experience as a securities lawyer. I was involved in, as on the plaintiff side, on the good guy side, in everything from the Madoff, MF Global, Enron, you name it, from the small frauds to the big ones, helping investors get their money back. So,
I'm Massey with MediaShares. We're a PR, marketing, and IR firm that helps companies market their offerings. And we're very glad to be here today. And I'm going to start off with asking you a question, Joe. Obviously fraud is a big subject in the microcap world. What types of fraud are there in the microcap? The biggest issues that you see?
There's a lot of different, when you're getting into the technical names for the frauds, things from market manipulation to scalping, pump and dumps. I like to group everything sort of two big buckets. One is the pump and dump schemes, where really like control of liquidity, false information is the overall theme. And the other bucket is naked short selling, which we're seeing a lot more in the microcap space. It's something where, particularly on OTC markets, where you have market makers that can sell short purportedly in a market-making capacity, they have an exemption from having to get a locate before they could short sell a stock. And what happens is a lot of times you have some fraudulent market makers that will not really be trading in that market-making capacity to create liquidity, but just trying to push that stock down. They'll rely on that reg show exemption as if they were market-making, but they really are not. And that's where you get a lot of this naked short selling in microcaps, where a lot of times you wouldn't expect it because they're not marginable securities. So you really shouldn't be able to short these stocks in most cases.
Shouldn't be able to naked short anything.
Yeah, of course.
That's we could do a panel on that, but that is an issue that your former employer has done I think everybody in this conference would say, an absolutely abhorrent and piss poor job of regulating. It's disgusting.
I would agree with that.
Marc, what do you think could be done about that? I've got a client right now that's being naked shorted, and I don't know what to do about it. What can you do in a situation like that?
There's not a whole lot you can do. I mean, in some instances, you try to figure out who's behind it, right? Sometimes it's a hedge fund, although it's not people that I would necessarily consider hedge funds in the way that I describe them. If the company is worthy of it, doing the kind of things that you and other people in your side of the industry do, Gene, I think getting the word out, the shorts don't do well when the stock price goes up. It ain't rocket science, right? So helping get the story out can help drive the hornets out of the nest.
I'd like to address that.
Yeah, please.
We did some marketing for a company recently that was relatively unknown, and they came out with a wonderful profit statement. This quarter we made $3 million, and that alerted all the shorts.
Yeah, there is another side to that coin, right? Of course, but I mean, look. Until the regulators get their act together, and I try not to use profanity on panels, but one might be driven to do so on this subject. We saw different folks coming out trying to address it from a technology perspective. I mean, in today's world, and without getting into blockchain, but in today's technology world, T+3 makes absolutely no sense. It's almost like, no, we're still requiring you to take an envelope, put a stamp on it, and go to the post office to clear and settle trades. It's it's asinine. But anyway, I
Yeah,
don't want to go down the naked short and reg show rabbit hole.
Well, I mean, you touch on an interesting point. I think one of the things that we can do is more transparency, and it's something I spoke about at the SEC when I was there. Why can't we see the current positions at all clearing firms, where the shares are, to see that they're consolidated in one spot, to see that, hey, this firm, this one clearing firm, almost 95% of the outstanding float is sitting there, being able to get more insight into how these things are clearing and settling.
There's some things in this world that are not necessarily flagrant violations, but they're immoral and things that are going on. I'm sure you've seen things like this where death spirals of debt and things like that.
Yeah, look, to a certain extent, the providers of those kinds of facilities have become the investors of last resort for many of these companies. And they're not per se illegal or violative from a regulatory perspective. And in fact, many of those facilities don't break any rules or laws, but they do set microcap companies and small cap companies on a path that ultimately leads to a very bad place, right? So I'm not really sure what the solution is to those problems. It's, in many instances, those companies, they're willing, not in many instances, virtually all, they're willing participants. They understand. They talk to their attorneys, like some of the folks that are here from the firms that are sponsoring, most of which I know from 20 years on Wall Street as a securities lawyer. The attorneys say, this is not going to end well, but there's nobody else that's offering capital at anywhere near those kinds of terms. So it's sort of a necessary evil in the market, unfortunately, for some of these companies.
When crowdfunding first came out in 2012, everybody said, oh, there's going to be massive fraud. And you correct me if I'm wrong, but there's probably more fraud in Reg D than there is in the
1,000%
crowdfunding world.
1,000%. We've had, I guess now 5 or 6 of companies in our portfolio within the family office but John Najarian, my business partner and dear friend that we run, we've successfully raised 165 plus million and counting through Reg A plus crowdfunding. And I think the requirements of having, full audit and all of that transparency, which of course I could do a 506C Reg D right now, and get a prospectus
and write it on a
done by
napkin.
lunch.
You can write it on a napkin.
It would be a big napkin, but so I think, and I don't want to. So I keep doing that, Joe. I'm sorry. I don't want to steal all the time from Joe, but I think the short answer to your question is yes. There is more in the less. It's transparency, right? Again, it's not rocket science. Reg D does not require the same level of transparency that Reg A plus and other registration exemptions require.
Yeah, and I think just with the traditional reverse merger with an S1, I've seen a lot of scenarios where you get this type of predatory lending from financiers early on. So it's a private company, they're looking to go public, and somebody comes, they're going to infuse capital, and some of the deal is this convertible debt or stock warrants that they can then convert at a discount. And the problem is that they can basically convert that, and it's just printing money. If you can convert at a 40% discount to the market price, as long as there's a little bit of liquidity, you're going to be able to convert, sell those shares. You do it slowly, you trickle it out, but over time, it's just diluting the company.
Who are the biggest victims of this fraud? Is it just investors, or the companies are victims of fraud as well?
I think it's both. I think it's a lot of times you have unsophisticated companies, private companies that are really trying to build a product, come out with something groundbreaking, and they just fall victim to these predatory lenders. They just don't really have the knowledge to be able to spot some of these things early on. And then, of course, investors who, over time, as something specifically with the convertible debt, they just keep getting diluted, and, it's a losing proposition.
And not to get too philosophical about it, but I think it's all of us, right? Like, technology innovation suffers. The greater economy suffers. I mean, unfortunately, a lot of these instances of either outright fraud or toxic facilities or what have you are in healthcare.
Yep.
Right, and sometimes it makes me wonder how many solutions, either drugs or therapeutics or what have you, don't see the light of day not because they didn't make it through phase 2, not because they didn't pass their animal trial or the therapeutic trial phase 3 or what have you, but because they got lost in the valley of death that we're talking about here. But again, I don't want to get too philosophical on it.
Well, I know you've both been in the business a while. What's some of the biggest frauds that you've seen? You mentioned that you were involved in the Madoff thing, so.
I thought Bernie was the biggest until I met Sam Bankman-Fried, and it's kind of impossible not to talk about that. And with your permission, because I would really love Joe's input on this, I think the hardest area of fraud detection is people and personality, right? You can dig through numbers. You can look at, we had in another company just a few weeks ago, a data business had gone public through a SPAC. Their margins were all wrong. And I kept saying to the board, like, I know this business. I co-founded a data company 12 years ago. The margins should be double what they are for what you guys do. Turns out there was somebody doing some chicanery in the books. They sacked the C-suite. There's a restructuring group in there. That's sometimes easier to find because numbers don't lie. People do. And what was so brilliant about Sam Bankman-Fried, Sam realized that guys like us, right, realized that people that are quants, that have that side of the brain so developed, that can trade and do math and do numbers, are socially awkward. I used to say when I was in a fund of funds, I would want to allocate to the hedge fund manager that looked at his shoes, had like 2 girlfriends in his entire life. If he was a salesperson with my personality, I'm not giving him an effing dime. So Sam figured that out. Sam figured out that if he could portray himself as this quant brain genius that can't be bothered to take a shower or put on long pants when he's on stage with Bill Clinton, that we would all be duped. And my God, he duped a lot of people, but where I'm embarrassed is there were so many people that were just, well, he did diligence, and he did diligence, and he did diligence, so I'm not going to take the time to figure out that Alameda Research is run by a 24-year-old woman that doesn't know what a stop loss is. Like that, and that. So how do you address that personality? How do you find the bad guy who's got a completely clear background check, no priors, all the diligence checks out, but he's a psychopath like Sam that's just a ticking time bomb?
I think it's a lot of these subtle things that somebody like you or me can notice right off the bat. Just looking at it, it's just going to be that smell test. Yeah. But most people don't have that experience, and I think this is one place where artificial intelligence over time can really help with some of these things. You hear buzzwords now like ChatGPT, but like all of those patterns that you were talking about, those things in the numbers, just being able to see, hey, these margins aren't right. That's something where the everyday investor won't be able to tell, but artificial intelligence can. So to use as sort of a screening tool to look through, okay, for this type of company, what seems wrong based on the data points that we have from the past? If it's the margins, just throwing up a few signs, hey, you should consider looking in deeper into this. I've played around with ChatGPT, just pasting in some of these stock promotions, the quote-unquote, finance newsletters, and it does a great job of picking out, hey, here's this red flag. They're talking about the industry, not about the company. They're talking about buzz names like Warren Buffett's invested in the space, Elon Musk is invested in the space, and they're doing everything they can to throw up smoke and mirrors so you don't see that there's something wrong with the company or that there really is no product with the company.
One of the things I think is really important is people will give you clues when you first meet them. They're funny, doing funny things, and you know there's something, use your intuition, there's something about them that you really don't trust. I'm sure you know what I'm talking about, and that could be a way to, we have a philosophy that, of course, you're going to abide by all the SEC rules, but we like to think that we don't want to do anything that anyone would walk away unhappy. And so if you have always the concern for the other person, you're dealing in a world, most of the people didn't go into nursing or teaching, they went into the money-making business. And not that that's bad, because this is how you make companies go or grow, but it's a different world. They didn't go into charity, they went into making a lot of money. And so there's a real thing where if you're concerned about other people's welfare and doing the right thing, you won't have fraud.
Yeah, definitely. I mean, there's, I'm sure most people have seen Wolf of Wall Street, and they talk about Fugazi. So it's really, misinformation. It's not necessarily false. So you need to be able to spot, where are the facts and where is just the touting, and really be able to dig deeper and say, okay, they're not really talking about anything substantive here. They're trying to mislead you with fast talking, big names, high pressure, talking about, an industry as a whole, and just taking your attention away from the actual facts that matter. Vagueness. We just signed a letter of intent, pushing out press releases that really aren't talking about anything substantive, just talking about what might happen, what could happen. It sounds great to most everyday investors, but when you really peel back the layers, they're not saying anything that's investment worthy.
Yeah, I think that's a really good takeaway. I'm all about actionable insights when I'm doing stuff like this, and this is conference 6 that I've, in the past 7 days that I've been at in different parts of the country. And that's an actionable insight, right? Companies that are not FOS and have good stuff to talk about will present those good things to talk about. Companies that don't have something to talk about are going to issue press releases when they add an advisory board member, and you're like,
they're not false.
Who cares? They're not false, but there's no substance.
And it sounds
there.
good.
Yeah.
And I think that from an issuer side, when you have financiers, lenders that are putting pressure on you to push out press releases, that's a huge red flag right there. As officers of the company, you should be putting them out when there's something substantive. And if, a third party, even if they're sort of involved with the company, is putting pressure on you to, hey, we need to get this out right now, we need to get this out today, something else is probably going on. They probably have something else lined up where they're gonna be trying to dump it. They're trying to create that demand. So always kind of take a step back when that happens.
And there are tools out there that you can use to see who's actually in the stock at any particular point in time. Obviously, everybody in this room probably knows what I'm talking about. There are funds. I'm not going to call them hedge funds. There are funds that provide the kind of facilities that you're talking about, right, that both of you are talking about, that if you see them in the cap table, you can probably guess that there's going to be some downward pressure on the stock, regardless of what the news is. But to me, I think the biggest challenge, because after Bernie Madoff, we're like, this is not going to happen again. We're going to do, institutional quality diligence as if we were Cambridge representing the Harvard endowment.
Nobody's ever going to cheat again, right?
Nobody's ever gonna Bernie us again, right? Like, just
It's not going to happen.
It's just not where there was entire trading floors. He would bring people and say, "Oh yes, this is another trading floor. I'm going to put another 400 traders on here," and there were no traders at a certain point, right? It was just completely smoke and mirrors, and yet it happened again with Sam Bankman-Fried. So what I'm sort of focused on in terms of my own fraud detection are those intangibles, the poker tells that you were talking about, Gene, right? Mm-hmm. The fidgeting, the inability to look somebody in the eye, unless you're a brilliant quant. That's the one exception to that. So that's where I'm continuing to try to hone my skills on. Unfortunately, I think when we talk about AI, and I'm a huge data nerd and I'm a huge AI fan, the first 4 innings of AI is going to be helping fraud.
Oh, yeah, absolutely.
There's somebody out there that ripped audio from one of my recent Fox appearances and is using it to leave voice notes on Instagram representing me soliciting cryptocurrency. And it's like whack-a-mole. Every other day,
100%.
there's another one of them. But they're using AI now to take it to the next level.
All the more reason we need to get in front of it, though. And
Agreed.
I think that just going back to how can we stop some of this stuff, I think it's just investor education from an early age. When we're young, we're taught that before we cross the street, we look both ways. We don't wait until we get hit by a car to teach people that traffic is dangerous. So what can we do from an early age to even in elementary school? We teach so much stuff that people don't use throughout their lives, but nothing on investor education, how to spot a fraud, and it's every fraud. The same red flags that I know when somebody calls me and tells me that it's Microsoft and there's a problem with my computer they need to get into, it's the same red flags that helps me spot an investment scam. So, what can we teach people from an early age to just help protect them overall from fraud? Because fraud is skyrocketing. No matter what we do, it keeps going up every single year. It's just going to get worse. So I think we need to be more proactive and look.
What can companies do to minimize fraud in their public offerings?
My take on it is surround yourself with the best advisors that you can, right? There are, some of them are here and some of them are sponsors. There are attorneys and accounting firms that have been around this business as long as I have. I know that's hard to believe. And are really good at this, right? They're really good at citing those red flags. And even in those areas, Gene, where it's that intangible, something's just wrong. I mean, I've said this on stage before, I told Mooch, who's a dear friend, that I thought that SBF was FOS. If anybody needs the translation of that, I'll give it to you in the back of the room. Because he gave.
How about using a really good, honest marketing firm like MediaShares?
That's critical. Critical. This is not a paid endorsement.
You guys want to wrap it up? We got
100%. As far as what companies can do, I think it's just don't take any outside pressures from people that are financing you. Put out press releases when it's something substantive. Think about the long term instead of the short term, and surround yourself with good advisors. The same way that you can look and see some of these quote-unquote hedge funds involved. It's a bad deal. The same thing, there's attorneys out there, there's accountants out there, there's transfer agents out there. When I see on a deal, I know that that's a huge red flag right there, Yeah. So.
Advisory boards, too. So many times we look at a company and get involved in a company, and they don't have an advisory board. And I think that a lot of people don't take advantage of that. You have your board of directors, but you have this opportunity to put a whole other group of really highly qualified industry-specific people together in an advisory board capacity, and I think that's
a good point.
Do we have time for any questions, Gene?
We're actually closed, but maybe we could take one or two real quick. They hadn't kicked us out yet, so repeat the question after she says. Oh.
Hi, I'm Cheryl Murray Powell, Esquire. So I'm a cannabis agricultural dietary supplement attorney, and I work with a lot of applicants. They get their licenses, and then we discover that they really need a lot of funding. Start talking to investors, and one of the challenges that we're having is there's a lot of people who are, I guess they're brokers for investors, or trying to broker all these different types of deals, and it's really difficult to determine who's the real investor and who's not. When we ask for proof of funds, it's met with disdain. People are, whether they're apprehensive or offended. So how do we navigate as as good actors trying to find viable funds for our clients when there's this atmosphere of people who are perpetrating as investors when they really don't have the funding. They're just trying to lock down an LOI so they can utilize that to gain funding from other sources and things like that, which leaves our clients in a vulnerable situation. So 2 questions, I guess. Insight on that type of navigation, and then also the proof of funds.
One thing I do is ask them, what have you invested in before?
Exactly what I was going to say.
Yeah, I mean, it's not. I don't think it's that. It's a great question. I don't think it's that hard of a solution. Particularly in the cannabis space, there are a good number of reputable funds that report their AUM to PitchBook and other companies that track this, that you can find out if they're real. So in the fund space, I think that's fairly easy. When you start to get into the family office and the individual investor space, it becomes even more opaque. And in that regard, I belong to probably half a dozen different family office groups where they actually vet their members. They have to say, we invested in these past 3 deals, 4 deals, 5 deals, and that's those gatekeepers can often help you separate the wheat from the chaff.
Yeah, and even a simple Google search, is that lender's name coming up, press releases that are just the letter of intent and then nothing else after that? What can you see that's substantive longer term?
I think we're going to get the hook. You know where Get the Hook came from?
What? No, I don't.
It came from vaudeville, and the guys would talk, and they were no longer funny, and they would stick a cane off the side and drag the guy off.
So we should probably go before that happens.
And I'm seeing the signal that we're over here, so we want to thank everybody.
I think we made fraud funny, right? I mean, too early in the morning.
All right, thank you guys.
Thank you, Gene.
Thank you, Deal Flow.